Good evening. This is the Elliott Wave update for the S&P 500 for Sunday, January the 16th, 2022, where we are under a full moon. Let's take a look at the S&P and what we did on Friday and where we are sitting. So being that the US markets are closed tomorrow on Monday in observance of the Martin Luther King holiday, I'm going to take the opportunity to take a quick review of the SPX and then the ES as well, because the SPX is just the cash market, to see where we're coming from, what the potential of this switch that I've now made in the count. As I told you, if the market would have come down and break below 4,627, as it did on Friday, that it would likely force the count to switch from being a minor wave 1 to being an intermediate wave 5. And all those minute waves that I counted, they're the same, but they're now minor degree. So I'm labeling this as the high of intermediate wave 5, which in turn is likely completing the primary 5 and the cycle 5. And then on top of that, the super cycle wave 3. So that would suggest that the S&P is in a much larger correction. Let's take a look. Let me first go out to our maximum chart here on the S&P to see how much data we're getting. You can see we get to that cycle 3 and 4. So we can go back far enough where I'm looking at this particular wave as a cycle 5th wave. And within that cycle 5, we need to have 5 waves of primary degree, which we have primary 1, 2, 3, and 4. So from the March 2020 lows, which was that first severe drop that we got after COVID hit the US, and we saw a huge failure of many different agencies within our government to getting into gear to do something of what was going on. It was bloody, it was nasty. Now, from that level, though, we've been in a primary 5th wave. Now let's drop down to the weekly chart and take a look where we're sitting. Here again, primary 3, primary 4. There's the low of that first drop when COVID and the pandemic hit. Now within primary wave 5, we have 5 waves of intermediate degree. Wave 1, wave 2, this is now wave 3, wave 4, and wave 5. Now, what could possibly change back again would be that my daily chart, that this 3rd again would move up to here, and that this 3 would come up to here, the 4 comes back up to here. This turns into 1, 2, 3, 4, 5 for 3. And then this would be a 4. Now, what's going against that is that it just, let me drop it down again. Let's look at the 4-hour chart. So if indeed that was the count, and we were labeling this as a completion point for the intermediate 4th wave. So no, excuse me. The way that this was labeled previously is this was minor wave 1 of intermediate wave 5, and that this was minor wave 2 of intermediate wave 5. And this was minute wave 1 of minor wave 3. This still can possibly be a minor wave. Let me get this correct. There you go. Get it correct, guys. Oops, I'm going in the wrong direction. Come on. There you go. This still could be a minute wave 2. I literally can't call the rally off. I put this in because that's my gut feeling. But the S&P could come down to 45, what's this low? Come on, 4572 0.75, and still be considered a minute wave 2 for a rally up. Now, if that is the case, then the market really should not be dropping, but it is. And we're breaking down, as we did on Friday, we broke below what was being labeled as minute 1, minute 2, subminute 1 of 3. You see how if this drops all the way back down? So it really could not have dropped. It changes the count. It just makes it not very clean. Now, I can't cut everything off until it really breaks 45.72. So I don't think I'm jumping the gun here. But I am now going to suggest if it really is going to rally, it's not doing very well yet, and the US is closed basically tomorrow in observance of Martin Luther King, the holiday, but Globex is open until tomorrow morning and then reopens tomorrow afternoon/evening. And then we, as the US, resume our regular hours on Tuesday morning. A lot can happen, but this would mean that the balance of Asian markets got to turn this around. They've got to break back above the 8, the 20, the 200, and then the 50, and turn this all higher. Can it do it? Yeah, it can. Look what it did. It went down all the way down there and zipped back up on Friday. So yeah, it can. It certainly can. But this was an expiration. Now we got the earnings. We got the bank earnings that came out. They didn't like Goldman Sachs. They didn't like JP Morgan. They didn't like Citigroup. There's still many to report. I think Bank of America still looked to report, but they didn't like what was coming out, particularly from JP Morgan. So this is just kind of a precursor that if the financials are going to continue to slide on earnings, what does it begin to tell us about the balance of what's got to come out within the S&P 500, which includes all the tech Titan stocks? We have Apple coming out in the beginning of the 1st of February. We have AMD, AMAT, Amazon, excuse me, Apple comes out, I believe, on the 26th. So we have the last week of January and then the first week of February for the bulk of what's left in terms of Apple, AMAT, AMD, Amazon, Facebook, Google, Microsoft, Netflix, NVIDIA, PayPal, and Tesla. Those all have to come out first, but then we also have Square, which is in the S&P. So we have a lot of things that still have yet to be revealed. And I doubt that surprises can happen, so I shouldn't use that word, doubt. But it doesn't look right now that the market is going to pick up this rally again and go to new highs. I've said it before, I'll say it again, stranger things have happened, but I'm not counting on it right now. I'm looking at the price action and it just doesn't look all that healthy. We're starting to move lower. We're now breaking below this hourly 8, which under normal circumstances would cause some stronger moves down. We see the NASDAQ now cleanly breaking down levels. And so I don't think that the S&P will be so far behind all of that. So for the S&P, if I'm looking at this as a 2, this is minute 1 of 3. Here's an ABC. We came down and broke below that, which if anything, it would have been a wave 1. So today's opening was good, but then the break back down below that killed it and leaves us as 3 waves. See, and even though that equaled that, so that's A, that's a B, and then we got the C, and now we're heading back down. So if anything, this gets labeled wave 2, and then we're dropping in a 3rd. Now, if we were in session, I would be expecting that acceleration. At least we're going to get below 46.21. Then we're going to get below 45.93. Ultimately, I think we break 45.72. So I've now put the Fibonacci extensions for a minor third wave. What would be minimal? Minimally, it needs to come to 45.03, which is where the third wave would be equal to the first. Possible. Being a third wave under Elliott, let's remember, number one, it's usually the longest and the strongest. Number two, it can't be the shortest out of 1, 3, and 5. So if it comes to there, it's just equaling one, which puts a lot of pressure on that fifth wave, because the fifth wave can't really have a whole lot of wiggle room. Nonetheless, wave 3 kind of would be expected to come all the way back to 43.57. Now, 43.57, what does that do to our daily picture? 43.57. Now we're looking at coming down to the, if this was the third, we're now coming down too far. So there's just too many things that are going against the markets right now to continue to hold on to a bullish upside picture, a bullish picture that takes us to new highs. That's my assessment of current action. So if we are indeed in that first phase of a larger downside correction, in other words, a larger cycle wave A super cycle wave A, but it's going to begin with, we could drive it all the way down, an intermediate wave A, followed, then that just builds into a primary wave A, which builds into a cycle wave A, which builds into a super cycle wave A. So we've got a longer term corrective phase in progress. There are going to be plenty of rallies, there's going to be plenty of declines, and it's all going to be very tradable. Now, again, just dealing with that mindset conversation, what really needs to happen now is you know to wrap yourself around the mindset of how do you be prepared? What do you need to prepare? What do you need to protect in the face of a larger corrective phase in the broader markets taking place? Instead of trying to determine the who, what, where, when, or how, we need to just wrap ourselves around the potential that it could. So what do you need to protect and how do you want to go about it? That's the mindset to go in. But for trading this day to day, that mindset changes back to what's trading in front of us according to the moving averages, to the Fibonacci, to the Elliott count, et cetera, et cetera. Then we're knocking out all that noise. But if you're going to attempt to trade on a day because you're trading against a larger position, or you're trading against what some other implications might come from a very large correction in terms of what happens to your 401k, what happens to the dollar, what happens to interest rates, et cetera, that's a much larger picture that you're trying to hedge for. So again, if that's what you're looking at, then I would suggest talking with a financial planner, number one, but one that understands the potential of what's happening. Because there are different things where you could start to put your money. Now, I think that when you're looking at a large picture of a very large correction being underway, it's not going to happen in 3 months. It's not going to happen in 6 months. It's going to take years. I'm telling you that right off the bat. So there's still a huge shift going on into people's minds that they got to shift from a bullish view, where it's like, oh, this is just a pullback, and you buy every dip, to no, you do not buy dips. Those you sell the rallies. It's doing the opposite. It's accepting what is the market is telling you. If you fight the market, you're going to get killed. That's why preparation is extremely important. So if you're protecting a long-term position that happens to be long somewhere, then you're going to have to deal with, you want to hold that position, then you better start protecting it. There are several ways to do that. Again, not for this conversation. I am more than willing to talk to people if you should have an inquiry. My email address is Michael at mjf1partners.com. Send me an email. We can arrange a time to talk. I can go over things, telling you what you'd be looking at and what's involved. If that's also for education. You want to know more about Elliott, you want to know more about the counts, get in contact with me. And I'm more than happy to talk. I'm here to help, to teach, to show what the avenues are. Now, back to what I think can happen overnight. And then again tomorrow, because again, we'll be open until I think 8:30 Pacific, 11:30 Eastern. Then the markets are closed again until the afternoon when the Globex starts again. I'm looking for this to continue. Now, it may not really begin to accelerate until Europe opens. Europe has a way that they'll drive the market lower because they will trade it against what their own markets are trading. And if we begin to see the cracks come in the DAX, in the Amsterdam market, in the London markets, then things may really start to break down. And then we are looking for a move to, we have 46.33, oh, excuse me, 46, what is that? 93, 46.93, 45.72. That's where that support comes in. That's also a sweet spot. If it breaks, I've been looking for acceleration. That's breaking that low as well. A market will accelerate. That support will be gone. People are going to want to get out. People are going to sell it. Then we have 45.53, 45.20, which is this support level for the intermediate fourth wave. That starts to break. Not going to be pretty. Not going to be pretty. Then we're looking for a move down to 45.03, but ultimately we got all this to cover. And then look, we got black hole. So we can get all the way down to here. I am not going to suggest that this is all going to happen tomorrow without the US participation. If it did, oh my God, be out of the way. Do not buy into this. If this thing really starts to give it up, do not try to pick a bottom. There's a whole lot of unwinding that's going to take place, and it's going to take place quickly. So I'm going to leave it there. If you're going to trade the Globex session today, this evening, or into tomorrow morning, continue to follow your moving averages, continue to follow the Elliott, continue to follow the Fibonacci support levels. And do not get married to either direction. The volatility will begin to pick up. If we're dropping, the volatility will pick up, and it will do so in both directions. We'll get very strong bounces. They will be very tradable. Do not get married to either side. I'm going to leave it right there. And because Globex is in session pretty much through our mornings tomorrow, I will make an update tomorrow afternoon once Globex restarts, and we'll take a look at what took place and what we can look for on our Tuesday morning. So again, if you're going to trade, trade smart, trade careful, and our next update will be on Monday the 17th.